One article on Monday was all it took to wipe out billions from the stock market. It questioned the sustainability of AI infrastructure spending, and it was more than enough to rattle everyone. And it all came before the biggest earnings of the quarter, Nvidia. Now, Nvidia's earnings is not just about the numbers, because how they present it will make or break the entire AI narrative. So in today's video, I'm going to break down that research article, whether the reasonings were justified, what do I think about it, and how I am positioning myself ahead of Nvidia's earnings later. Now, I want to start off today's video by sharing with you something that Trump said literally just a few hours ago, which is we are waiting so much that we really don't know what to do about it. And apparently people are saying, please, 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 Mr. President, we are waiting too much. We can't take it anymore. And you look at the VP behind smiling happily and his other person beside him as well, right? So this is what Trump said. And why is he saying that, right? Is he saying that because the S&P is now literally just 1.24% from its all-time high, even though we have seen such a heavy tech sell-off over the past few weeks. Okay, and when we look at the tech sell-off, it's very interesting. So today is Wednesday, and when we look at the news on Monday, right, this was on together with the article that I was talking about just now. Dow tumbles more than 900 points for tariff uncertainty. And just look at the time. This is in Singapore time at 5 a.m. on Tuesday, 24th February. And literally just about 17 hours later, tech stocks power gains after AI fueled sell off. Okay, so you can see how the media actually shares with you two different information within a matter of hours. So is the stock market selling off, or is the stock market going to new highs? We don't know, right? But what do I know is this, is that when it's a bull market, you will see many people just screaming, buy, 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 everything to the moon. And you want to be very careful of that. At the same time, in a bear market, when everything is dropping, you will also start to see the bears coming out, shouting everyone to sell, sell, a crash is coming, sell all your stocks, hold 100% cash. And you also want to ignore all of this, right? So these are the things. And what we are seeing now after the tech sell off, what kind of bear research, what kind of bear news are coming out? It is actually this article by Citrini Research, okay, a very well followed Substacker. So he posted this article that is titled The 2028 Global Intelligence Crisis. And the idea of this article, how he actually wrote it, is in a way a look to the future, 2028, and enacting how the future will look like as we advance ahead. So this is not just like, we look at what we have now and right. So he write it in a way of today now is June 2028. How is the market looks like? And a lot of things that in a way when you read it, you feel like it makes sense. But let's look at this, okay? So this is a very long article. I'm going to summarize it very quickly, but you can also find the article. I'll share in the link below as well. So the gist of this whole article is that Citrini Research argues that the world may not be heading towards a shortage of intelligence. In fact, with AI, there's only going to be an abundance of knowledge and intelligence. But why did he argue that the world will be heading towards a shortage of intelligence? It's not because of a lack of AI models, but because of constraints around compute, energy, and infrastructure. Just because AI demand is scaling so much faster than the physical system that's required to power it. And the idea is, what happens if AI becomes so good to the point that AI agents take over the application layer, which means that basically every one of us that have a job right now don't need a job. The AI can be so good in a way where it can replace everyone's jobs, and companies will let everyone go, right? And unemployment rises to historic level. So this is the whole gist of the article. Okay, and he also shared about this negative AI feedback loop. So what this feedback loop means, right? So right now, this is a traditional cyclical recessions, right? Where there is new construction recovery, and after there was overbuilding or too much supply, then it leads to a slowdown. Slowdown, it leads to lower rates restocking. So this is in a way a self-correcting loop. But in the era that we are in now, the AI era, it produces this AI feedback loop where there is no natural break. Okay, and it all goes down to how AI investments and capabilities will increase and improve over time, which will lead to companies needing fewer workers. And when companies need fewer workers, what happens? They will lay off. workers. And when workers are laid off, means they have lesser money to spend, right? So they will actually spend less. And when people are spending lesser, that means the economy weakens because people are not willing to spend on expensive things anymore. People just want to buy essentials and things like that. And that's how the economy will slow down and weaken. And for company, because when people are spending lesser, it means they are getting lesser revenue. So instead of actually in a way borrowing more money or whatever, they are going to invest more in AI to protect their margins to further drive down costs. So he's saying that this is a no natural rate feedback loop. And in a way, it makes a little bit of sense, right? Because when AI system continues improving, white collar disruptions becomes very real. So I'm talking about legal work, accounting, coding. We've seen last week, right? Just last week about Claude code security coming out and effectively, in a way, putting people, coders or developers' jobs at risk, right? So the whole idea is that entire layers of knowledge work could become partially automated, and there's no need for labor anymore, skilled labor. And these workers, when a company displays them, these workers are also consumers, right? So this is the negative feedback loop that he's talking about, right? The AI increased productivity, company cut labor, household incomes grow slow, consumption soften, and economic growth slows down, which then pressures revenue. So this is that bear thesis. But I want to share with you the other side of it, which I also found online, and it is by this person called the Kobessi newsletter, right? That what if this doomsday narrative is false, right? So and what we so don't get me wrong, what he shared is that for AI, right? There is that way where AI will actually displace businesses. Definitely. It's not that all AI is just something that will not be here. It will definitely be here to stay, but not all business will be affected. Okay, so one example of how AI actually initially tried to disrupt was the cloud code that we shared yesterday, right? Of how we saw a lot of cybersecurity companies selling down, shedding hundreds of billions of market cap as a result. And this is not the first time we've seen this story. Anthropic released a new tool. Claude get materially better at, for example, coding or workflow automation. And we even saw Claude getting better at COBOL, which actually caused IBM to drop 20%, the most it has in the last 25 years in a single day. Right? That bad of how AI can actually displace that. So this is what we are seeing right now, right? That AI tools will indeed displace some industries, but not all. And even if costs get cheaper, will it actually create the fact that people will not spend anymore? So what this article shares is that this idea of price of PC, where when PC first came out, it was so expensive, right? But right now it is 99.9% cheaper than it is today. And what have we seen the demand of PC over the past 40 over years is just getting more and more, just because it has become more accessible to people, right? Just imagine if you are eating very expensive sushi, and the cost of producing the sushi just becomes cheaper and cheaper. I mean, regardless of the quality, let's assume the quality stays the same, or even the quality gets better, and it becomes cheaper and cheaper. It will create more demand, right? Because it's much more accessible to a larger population. Okay, so this is how what we've seen history. How history suggests otherwise, that when the cost of producing something collapses over time, demand rarely stays flat. Demand actually expands. So when, example, over the past few years, when compute costs fell back in 2021 onwards, right? Businesses did not consume the same amount of compute more cheaply, right? There were actually more orders of magnitude, more of it, and built entirely new industries on top, right? So this is one example that this article also shared. Now, the ultimate idea, right, of these two debates is this, right? That at the end of the day, what does AI do? AI improves productivity. So if AI delivers strong and sustained productivity gains across different industries, then what is the result? The result is abundance and increased access for everyone, right? Because it is cheaper. But for companies whose margins depend on high cost labor, they may suffer, right? They have to spend a lot for particular labor. For example, consultancy businesses, they have to spend a lot on the labor, right? But the broader economy will benefit from lower service inflations and higher real purchasing power. Okay, so this is the main difference between both. Okay, as to what I think both have very very valid reasoning. But to me, looking at how history shares, right, history is not the same, but it does rhymes from time to time. From how I see it, right, I think that AI will definitely displace some industries, 100%. Some industries and some businesses that might not be vital to many people, right, especially those that cannot provide that level of experience, right? Whereas for businesses that still requires where customer experience is of a strong importance, you definitely need that human touch, right? That human touch, and that is where it might not be displaced. That's number one. Number two, it is also how deeply ingrained a business is inside. Okay, that company, right? That software is in a company. For example, if you talk about cybersecurity, right, it is so deeply integrated into a business, and unless Cloud can come up with a full suite of systems that many people will flock to it, and in-house systems can build, have a lot of funds to build and troubleshoot, then more often than not, they will stick to what works for them already, right? Is, for example, like you are using Facebook or you are trying to build a whole new social network on your own using Cloud Code. I believe you can build it, but will you able to get traction? Will you able to get more people on the platform for you to improve it over time? It's not going to be easy, right? So this is what I think about this article. Okay, now let's move on to what we've seen. Some earnings that we've seen happen actually just yesterday. The first one is Axon, which is also a software company which was sold down hard, and they delivered a very strong quarter. Revenue growth was up 39% year on year, supported by strong taser demand and expanding subscriptions. They have proved that they are vital and they are super sticky to the police force. Okay, so basically what they do is taser, right? You know those guns, and that's one of the services. They actually started from there, and they also have body cams, and these body cams they actually sell the software subscriptions for all these recordings on their platform as well, and they all sell it to all the police forces precincts around the United States. So you can imagine how sticky it's going to be once you use it. You can't actually get out of it. So Axon is one example of where it is not so easy, even though they are affected by the software sell down. It's not as easy to displace them as just creating this new body cam footage website from Anthropic or whichever large language models. So for Axon, right, the recurring revenue mix continues to rise, which improves a lot of their margins. And what the management also share is that, that there's international expansion, and they continue to integrate AI-driven tools into their public safety workflow. And the market rewarded that consistency, right? Right now, this is now we are in pre-market, and they are actually up 16% pre-market. So this kind of also tells you how much it has been oversold. And when we look at the charts, right, where has Axon been? It has actually been holding very well on this 200-day moving average. So this is the daily moving average, and now it has pushed back up to the pre-market price of 514. Okay, so we are seeing very good, and I think that and this is also why I share that. Would the sell be too overblown already? Has everything sold off too much, or is there still a long ways to go? But I think from all of these earnings, we are starting to see that these companies and some companies are actually undervalued. So this is the ASI resilience analysis that I created as well. So you can see Axon is very resilient to AI just because of how sticky they are in the vertical segment that they are in, which is public safety. Okay, so you can see they are actively deploying agents, and they are transforming from just becoming a hardware manufacturer to this neural network of public safety. So it's they have a very very strong resilience score as well. Now, on the other hand, let's look at another healthcare company which is well followed as well, which is Hims and Her Health. Okay, and even though they beat their earnings, the margins decrease and the stock slips just slightly. Okay, and strong growth, strong subscriber expansion, strong momentum in weight loss and specialty offering. But the problem with Hims is not their growth. The problems with Hims is a lot of things that are a lot of news that are affecting them. Most recently, they have an FDA investigation on one of their drug, the Wegovy, which they have to stop marketing totally. So that will be an impact on their revenue. So the question for Hims depends on long-term margin durability. They still have to spend a lot of marketing, and customer acquisition efficiency will matter more as they are fighting with the big pharmas. Okay, and when we look at the chart, it is definitely not looking good over the past few months. And for Hims, right, this is just something to share, right? So this is the CEO of Hims, Andrew Dudam. So back in October 2025, he actually shared this replied to this post of someone who said the heme squeeze is here, like a short squeeze. And he actually responded with this one emoji, but this was not taken lightly. As you can see, it was literally on this day where he posted this. And since then, the stock has been on a downtrend since then. And a little takeaway from here is that generally, as what the market doesn't like is a CEO who focuses on the stock price. Simple as that. So as if a CEO is focusing or even just briefly comment on the stock price of the company, that's not something that the market like, because what market thinks is that for a CEO, you should be focused on growing the business and the share price will reflect itself eventually. You shouldn't bother yourself, or you shouldn't even entertain people that talks about this kind of share price movement. So this was what actually spooked the market. And whether it's because of the business fundamentals, whether it's because of this one comment, probably a bit of both. But as you can see how we are looking at the chart now, it's not looking very strong right now. Personally, I will wait for that reversal before considering an entry if this is something that you have very strong conviction in. But if you don't have a conviction in, this is a hard pass. Now, as to what is coming up, very straightforward. I think that everyone is waiting for Nvidia's earnings, which is coming out in less than, as of posting of this video, it should be less than 12 hours time, right? And they are literally carrying the whole stock market. Expectations are high. Focus will be on everything that they are doing, data center revenue, what the customers are saying, supply constraint, and more importantly, what is their forward guidance. No one is looking at whether their earnings will be a bit. In fact, it's a guaranteed that the earnings will be a bit already. It is more of how much are they forecasting their revenue for this year. That's all. No one is going to look at how their earnings fare. Now, so if let's say the thesis that we read off was right, Nvidia sits at the center of the bottleneck, and the market will basically be listening everything about demand, visibility, backlog, and expansion. And of course, like what I shared in the previous video, right, the markets also be looking, are the hyperscalers like the Mac 7s, are they still spending a lot? And any supply constraints, ease or tightening or whatsoever. So this is something that I can tell you every single one will be looking at it. Okay, so I will be looking at it as well and update you guys when I see the result. Now, so here's what I think, right, of everything that I shared today. Again, both bull and bear thesis of the article has valid reasonings, but of course, to say which one will play out is very hard to say. Now, for me, like what I shared, I think that AI will create more demand because of lower cost overall. Business will be more productive, save more money, and pass that cost down to consumers. And as investors, right, you want to think of the business if it can be easily replaced by AI in the future. So, for example, if you think of companies like DocuSign and Adobe, are they mission critical services? Do companies really, really, really need them? Right? As compared to, let's say, companies in the cybersecurity space, right? Do companies really need them for the business, or can they totally remove cybersecurity and just do it themselves? And know when they are doing this kind of in-house things, it's not something that they can spin out in days. It will take months of reiterations and costs involved, and one error can lead to billions of dollars lost for their business as well. So these are the risks that you want to think about whether a company, especially huge enterprises, will take. And you also want to consider how deeply integrated the company is to the customers, because it's not as easy as to change as we think, right? It's like asking you, if you're using Apple devices, right? It's like asking you to change your iPhone, AirPods, MacBook, every single thing to Windows and Android. But it's 100 times more tougher if in terms of large enterprises because of the deep integration. Now, with that being said, one thing that I also know is that for us as humans, right, with how it is a matter of fact that AI will just get better and better. And for us as humans, we just got to adapt, right? And this just goes beyond just being stagnant at what we are doing. We have to learn how to adapt and move together with AI, right? Until today, I know people who only know how to use ChatGPT, but that is literally the tip of the tip of the tip of the iceberg, right? As humans, for us, for you to stay as a linchpin in whatever that you are doing, right? You got to adapt. And this goes beyond just investing here. You got to upskill yourself and be adaptable to your workplace as well. So just some personal sharing that I hope it will help you. That's all that I have today. So if you enjoyed this video, be sure to hit that like and subscribe video. I'll be back tomorrow to break down exactly what happens in Nvidia's earnings, okay, as well as other stuff that is going to happen to the market as well. Okay, so I'll look forward to sharing with you tomorrow. So again, do subscribe and like if you enjoy this content so that you don't miss the next update tomorrow as well. And I'll see you tomorrow.